This podcast channel is about you, successful international entrepreneurs, successful expats, successful investors. Sponsored by HTJ.tax.
So I'm going to run through a few slides. Probably is not going to take me more than, let's say, about 20 minutes. And afterwards, you're free to ask questions. And that's the part of the webinar that I actually really look forward to, because I know that you guys are highly motivated. You came and you RSVP because you have certain questions, and it's an opportunity to open them up for discussion. There's a little box, there's a chat box below. Well, it's on my right, depending on what device you're using. So please feel free to put your questions in there. And once we get to the Q&A part, we will go through them in the order in which we receive them. All right. And on that note, I will start my short deck. Okay. All right. Welcome, everyone. So my name is Derren Joseph, for those who do not know. And I run a semi-autonomous US tax team within a larger practice called Moores Rowland. And it's quite regional. So we have 30 offices across, I think, around 11 or 12 countries in Asia. So this is as far north as Tokyo and Beijing, all the way down to Australia. I've actually been been based in Singapore for over 7 years now. I'm not in Singapore right now, but I've been based in Singapore for just over 7 years. And of course, because I am licensed by the US Department of Treasury, I'm legally required to say that whatever we discussed here should not be construed as advice. We're having general conversations around general principles, which I hope would empower you to choose the right advisory team to help you to make the right decisions in terms of tax planning as well as compliance in the back end. So those who expect that, you're going to come here with pen and paper and you're going to get all the info you want to run back and do your tax returns, it certainly does not work that way. So we are not giving any tax advice. We're having a general conversation. And nothing that I say here should be construed as encouraging you to pay less than your fair share taxes in any jurisdiction in which you're exposed. So that's how we stay out of jail. So yeah, you know how it goes. Okay, so let's jump right in. So for those who think that the US does not, the IRS in particular, does not pursue people who are on the wrong end of the tax rules, think again, it definitely does happen. These are two examples that I like to use, and we can come back to them later if there's any interest. But these are the takeaways. I want to talk about citizenship-based taxation. I want to talk about, well, okay, the US is like one of two countries in the world that practices this ostensibly. How do they find you? We're going to talk about that when we talk about FATCA. And then I'm going to talk about what your basic responsibilities are as a US person. And that's a little acronym that I developed called Do Your Best, BEST, banks, estimated taxes, state taxes, and transfer taxes. And then we're going to touch on the stimulus payments because that's of interest to quite a few people at this point in time. So as everyone should be aware, the US is one of two countries in the world that ostensibly taxes you on your worldwide income regardless of where you reside. The other one is Eritrea, a tiny country in the Horn of Africa, but they're incapable of enforcing that rule. But the US is definitely capable of enforcing that rule. So wherever you are a US taxpayer. Now, there are other countries that, the reality is that there are many other countries that do it as well. So because of certain fallback rules, depending on how that person exits their country, and it applies definitely to Europe, to the other countries that are English speaking, developed countries. So I'm talking about the UK, Canada, Australia, New Zealand. They definitely do it as well, depending on how the taxpayer would have left, and Europe and Japan as well. So anyway, but we're talking about the US. But my point is the US is not alone. Other countries are looking at what the US is doing, and they are increasingly tightening their rules to follow suit. So, okay, right, you get it, that even though you're outside of the US, maybe for months, maybe for years, you're still required to pay taxes. And then the common question is, hey, how are they going to know? How is anybody going to know how much I am earning, that I am earning outside? And that's where FATCA comes in. So FATCA is the Foreign Account Tax Compliance Act, which, despite serious misunderstandings online, is not a tax. What it is, it's a framework for information exchange. So the US government has signed bilateral agreements with countries all over the world. And these countries have passed legislation domestically, which mandates their domestic financial institutions to go through their books and identify anyone that they suspect of being US exposed. Now, obviously, sometimes, I have more than one passport, so do many of you. So you may use your other passport to open financial accounts, including brokerage accounts. Even if you do that and you deny that you're US exposed, if that financial institution suspects, and there are a number of indices that we can get into, if that financial institution even suspects that you're US exposed, perhaps without your knowledge, they may report you. So that's the check and balance in the system. Just like when you're in the US, you get a 1099, you get a W-2, you get a copy, the IRS gets a copy, so the IRS knows what you're up to. When you're outside of the US, every financial institution that you would commonly interact with, whether you know it or not, they are probably going to report you. Now, there are a few countries that have not signed FATCA, so that'll be like your Iran, North Korea, Cuba, but the ones that you would typically end up in, they probably have signed it. That includes China, that includes Russia. So be aware that you're being tracked, is the point. What is a US person? And, it may seem obvious, but some people aren't aware because we get these questions all the time. Obviously, if you're a US passport holder, it does not matter how long you spend outside of the US, you are required to file and pay your taxes. If you are a green card holder, so you're a lawful permanent resident of the US, just like a citizen, you're required to file and pay taxes as well. Even if that green card expires or you lost it or whatever, you are still a permanent resident and you're required to file and pay taxes. Substantial presence. Now, this has been an issue for non-Americans who have, through no fault of their own, been trapped in the US during the health crisis. Because, I remember like sometime last year, there were like 100,000 Australians who could not get back into Australia because flights were blocked. Now they're down to about 38,000 Australians, I heard a couple of days ago, who cannot get back into Australia. So it's a thing. So many people cannot go home, and you may be trapped in the US by virtue of being in the US for a certain number of days. You're a US taxpayer. So congratulations, apologies. We have accidental Americans, so people who may be born to at least one US parent, even though they may not have registered the birth with the embassy, they don't have that certificate of birth abroad, they don't have a social, they are still US taxpayers. So, or those who may have been born in the US and left as a toddler or a child, you're still a US taxpayer. And the last one is something not very well known. If you are married to a non-American or a non-US exposed person, there are some conditions under which you can elect for that non-US spouse to be treated as a US taxpayer, and it may be to your advantage. If anyone is interested in that, we can take a deeper dive into that later, but I'll just mention it in passing. Responsibilities of a US person. So, obviously, you'll be subject to all things being equal, roughly 3 types of taxes. Well, you can slice and dice taxes in different ways, but let's say in general, income taxes. That includes capital gains on real estate or stocks or whatever. So income taxes, the gift taxes. So yeah, by giving a gift to someone else, it may expose you to gift taxes. So that's something that it's not very well known, especially if you're in a relationship with a non-US person. Gifts going back and forth need to be reported. And then, of course, there are estate taxes. So at the end, well, even if you're not domiciled in the US, by having US citus assets, they may be subject to US estate taxes. And if you are domiciled, then your worldwide assets are subject to US estate taxes, even though you live outside. And estate taxes is a bit not well understood. So you can take a deeper dive into that later on if you so wish. One thing I want to highlight, though, that with the US, it seems counterintuitive because you think, the IRS is all about getting paid, right? It's all about getting that money. Actually, no, because when you look at the penalties and the way that prosecution happens, they seem to be more interested in information than they are in actually collecting revenue. What do I mean by that? So you are required to report, I mentioned gifts, but you're also required to report your financial assets. So your bank accounts outside of the US, your brokerage accounts, your unit trusts, your certain pension funds, certain, whatever, mutual funds outside the US. So if you don't report financial assets, for example, and again, that has nothing to do, typically, it could, but typically it's not about revenue, just having a savings account, because we're in like a zero interest rate environment anyway. It could be a penalty that is as high as 50% of the unreported balance plus jail time. You can go to jail. Whereas if you didn't pay your taxes, well, yeah, penalties and interest. So reporting is huge. And another thing I want to draw your attention to is the idea that within the last few years, the State Department and the Treasury Department have started exchanging information. They now speak to each other. Previously, they did not. And what does that mean? So like a couple of years ago, we had our first case where we had an expat in Malaysia, and she had an outstanding tax liability. She was not paying attention to her taxes. And to be fair, statistically speaking, many people who live outside of the US, that sometimes slips off the radar. They do not stay on top of their taxes. Well, anyway, so she goes to the US Embassy to renew her passport. And then suddenly, I guess they typed up whatever on the system, and then, ooh, well, yeah, it's you. And they withhold the passport that she has just handed in to be renewed. And they said, I'm sorry, but you cannot get a new passport until you resolve your IRS issues. And she's in a foreign country by herself. So this happens. It's real. It's not just like some sort of conspiracy theory on the internet. It's real. State Department and Treasury do speak to each other. So when you're abroad, the last thing you want to do is be trapped outside of the US without a travel document. So stay on top of your taxes. Okay, oops. Right, so now we get into, oops, I kind of jumped over, right. Now we get into what I think are the basic responsibilities. The acronym that you can use to take away from this would be do your best. So best, be your bank accounts. And when I say bank, that's really your financial accounts. So all your financial accounts, be aware that you probably would need to check whether they need to be reported to the IRS. So bank accounts, report them. The penalties for not being compliant are stiff. E, estimated taxes. Obviously, when you're in the US, you get paid on, and if you got paid on a W-2, taxes are withheld every fortnight, every month, however often you paid. And when you're outside, you are not subject to withholding. The IRS does not like to wait to get its money, so they do not want to wait until April 15th. So you should be looking at making periodic payments at least quarterly to the IRS. So that's something you work with your tax professional, do the calculations, be compliant. S, state tax issues, something also overlooked too often. Most states in the US are domicile states. What does that mean? Under certain circumstances, even though you no longer reside in the state for months or years, you may still be deemed to be a tax resident of the state. And you think, well, I don't care. I'm traveling. I'm all over the world, right? But at some point in time, if you ever return to the US, they will be throwing a big bill at you. And we've had that situation where clients have returned to the US after expat assignments abroad, and they get big bills thrown at them, and we need to work with them to prove to the state that they were domiciled elsewhere. So it helps to be proactive in that regard. Speak to your tax advisors, find out how to break domicile before the states. And remember, the federal government, the IRS, and the franchise tax boards, they speak to each other. So information is shared back and forth. T, transfer taxes, mentioned that before. Gift taxes, whether you're giving a gift or receiving a gift, speak to your tax advisor. Is this reportable? And estate taxes, that's, for those who are high net worth, planning. That is something we can definitely, that's one of the forms of taxation that can be mitigated by proper planning. Speak to an advisor. Next one, just a brief word on the stimulus payments. This is who qualifies, citizens and green card holders. There have been 2 rounds of payments. There was the $1,200 one last year. I think it was probably around May, June or so. And now you should have received your $600. I did. If you didn't, there are portals on the IRS website where you can check up on it. Please check the website if there are any issues. The website has loads of information on it. All right, so if you did not receive the $1,200 last year, it's not too late. There is a part on the new 1040 taxes, because we've started doing 1040s for 2020 already, where you can indicate if you did receive it, it needs to be declared. It's not going to be taxed, but you still need to declare it. And if you did not receive it, you will receive it in the form of a credit. This is the one from last year. So if it is that you're going to get a refund, the refund will be higher. If it is that you have a tax bill, the bill can be reduced by the amount of the credit. So make sure you work with your tax advisor to ensure that you take advantage of that. Again, just calling out the website, pretty comprehensive. It's unlikely that you have an issue that cannot be handled either with the website on your own or in concert with your chosen tax professional. Just a quick note on the filing requirements. It changes slightly each year, and it's worth always keeping an eye on it. For those who may not be making much money, do note that depending on your situation, you may think, well, I don't make much money, I don't need to file. Well, under certain circumstances, the threshold for filing is $5. So again, depending on which category you fall into, that just came from the 1040 instructions. That's just a screen grab. So if you made at least $5 last year, you may have to file. Check out the IRS website, speak to your tax advisor. It's just not worth getting on the wrong side of the IRS. Okay, and I just called out some of the phase outs because our clients tend to be higher income earners, and then they come to us and say, hey, how come I didn't get my stimulus payment? That's because it's the price of your success. You made too much money, and therefore either the amount was reduced or completely eliminated. So it's worth bearing that in mind. If you did not receive it, this could potentially be the reason why. And that's it for my deck. And I'm going to stop sharing now off my other laptop. Great. And as promised, 20 minutes in. So now it's over to you guys. If you have any questions, please type it in the little box below. Let me have a look. All right. And what I'm going to do as well. What was the term you had on the slide for spouses that do not hold a green card? Hi, Mark. So a spouse who does not hold a green card is a non, well, it's a non, well, I'm assuming she doesn't have a US passport, nor does your, sorry, I'm not, doesn't, I don't want to assume that it's a she. So if your spouse does not have a green card, or your spouse does not have a US passport, then in US tax, in tax lingo, it's a non-resident alien spouse, an NRA spouse. But under certain circumstances, you can elect to have your spouse treated as if he or she did have US citizenship or a green card. And that's with a section 6013G election. Some people ask, well, under what circumstance would you want to bring your spouse who's non-American into the US tax net? We see two circumstances typically. It could be more, but the two typical ones that we see are simply to save money. When you, the US, I mean, criticize it as you will, but the US tax code, it works more favorably when you file jointly. If you're a married couple, if you file jointly, you will get more preferential tax rates than if you file separately. It's just the way it is. So for some couples, even though the spouse is not an American, you may elect to have them treated as a US person under section 6013G to get that benefit. And then the second reason is as part of your tax planning and as part of your strategy, because some people would eventually want to file for a green card to bring their spouses to the US, and understand that when your spouse arrives in the US, they are off the grid. They don't exist, right? Just, leasing a car, passing a simple credit check for rent or for whatever it may be, they won't, because they do not exist. Whereas if they take a section 6013G election a year or two before applying for the green card and getting one successfully, that helps, because then they exist. They get a tax ID, they file tax returns, their income is there for anyone to see. So it would help in terms of the immigration process, just in practical terms. So those are the two circumstances in which we see that election being made. Scrolling down. I'm a US citizen in Portugal, and how familiar are you with the Portuguese tax laws? I'm just outside of Lisbon, Portugal. So I am pretty familiar with Portugal as well. And if you look at our website, which is htj.tax, you will see that we're due to give a webinar on Portugal taxes for US expats, US Portugal taxes. I think we do that either next week or the following week. So have a look at our website, htj.tax. There I partner with my colleague who is a Portuguese qualified tax attorney. And we take a deeper dive into the dynamics between the US and Portugal. So htj.tax. Next one. Are there some general guidelines to mitigate taxes if one has properties and investments in the US, but are willing to relinquish US citizenship? Absolutely. What we do, or what we would recommend you consider doing, is engage with pre-expatriation planning. So the process of giving up your US citizenship, where we do 2 or 3 every single month. In fact, we had a client that did it just last week in a country in Southeast Asia. So definitely before, especially most of our clients are higher net worth. So with this particular client, they're what we call a covered expat, i.e. a US person who may be subject to the exit tax because their net assets are in excess of $2 million, or their income for the past few years has been over a certain threshold, their taxable income. So as a result, they're covered expats. So definitely pre-expatriation planning is a must. It's non-negotiable. You just have to do it, because things like this with your investments. If you have 401ks, if you have pension funds, it would be affected. The status of those funds will be impacted by you giving up your citizenship or your residency. So it's definitely something to do. What we do with our clients is well, back in the days, we do a whiteboard, but now everything is on Zoom. We pull up an Excel sheet with them, we share screens, and they list every single asset they own, everything, everywhere in the world. And we say, okay, well, what are the values? So we understand the quantum that we're looking at. And we walk through them one by one. When you give this up, this will be the impact on that asset. And therefore, if you are okay with the impact on that asset, thumbs up, leave it. If the impact is negative, then thumbs down, and let's do some tax mitigation. So we can do some tax planning around it. So it is absolutely important if you are, especially if you're in the risk, at the level of a covered expat who may be subject to the exit tax. Pre-expatriation tax planning is a must. Moving on. Okay, thank you. Do Social Security payments get taxed in Portugal? The answer is it depends. And the answer to everything is, of course, it depends, right? Hey, that's how the law works, right? So Portugal has something called the NHR program, which is the non-habitual residence. And what that historically meant, and many European countries have a variant of it. In the UK, it's res non dom. In Spain, there's a Beckham tax. Belgium has it. So Italy has it. Switzerland has it. So most countries have it. So Portugal isn't special. And historically, what it meant is that the income that was arising outside of Portugal will not be subject to taxes in Portugal. Lots of exceptions. These things are highly nuanced, and there's so much misinformation on, especially like Facebook groups and stuff, that it's bizarre that people believe that nonsense. But anyway, unfortunately, that rule changed towards the beginning of 2020. So if you grandfathered in, so you had NHR status before the rules changed, the answer is no, it won't be taxed in Portugal. If you got NHR status in Portugal, like I did, after the rules changed, then unfortunately, yes, it will be subject to the 10% tax. But of course, we take a deeper dive into that in the Portugal-US tax webinar that we do with Augusto, who is a Portugal qualified tax attorney. So you can htj.tax and you can RSVP to that one. Moving on, US citizen looking to buy and invest outside of the country. Any new business outside of the US will have paper losses for several years to offset capital gains made in the US. Well, with income has different character. So for example, I mean, there are different ways of slicing and dicing it, as we mentioned earlier, but let's say for the purposes of this question, we will say that there's earned income. So income that you get in return for services rendered or good that you sold, or whatever the case may be. So there's earned income and there's unearned income, which is commonly known as passive income. So this will be interest, dividends, royalty payments, stuff like that. Well, rent could move between either earned or unearned income. So the point is that if it is that you have invested in an asset, an income producing asset outside of the US, which will have paper losses, if the income producing asset is in the form of, for example, a business is a separate legal entity in law with rights and responsibilities of its own. It's a legal person. So for example, Steve Jobs was fired from Apple. So even though you are controlling shareholder in a company, the company can fire you. The company can sue you. So It's a separate person. Therefore, the performance of that company is the performance of that company. If the company is making a paper loss, that's the company, that's not you. Unless, I mean, there are exceptions to that, obviously, because the answer to everything is it depends, but generally speaking. So the fact that the company is making a paper loss does not mean that it transfers to your 1040. It doesn't. Now, if it is that you sell or you have a liquidity event and you exit that company, so you sell your shares and the shares are sold at a loss, then that loss could be used to offset, which will be a capital loss, obviously, will be used to offset capital gains. So, the offset needs to be in terms of its character. So, yeah. And of course, the process of investing in a company abroad it's a big decision. It's a big step. So as always, we suggest you take tax advice because there are frequently unintended consequences. There's something called GILTI, Global Intangible Low Tax Income Tax. There are different anti-deferral rules. There are PFIC rules. Basically, the rules that are designed by the IRS to almost punish someone who invests in a certain type of income producing asset outside of the US. So just to make sure that it passes that smell test, you should speak to a tax advisor before you invest. And then the way in which you invest, how are you going to invest? Are you going to do it? You're going to set up a C Corp in the US or an LLC in the US and then invest? Are you going to do something in the BVI or Caymans? Is it a fund? Is it a fund of funds? Is it real estate? Well, certain real estate. So we have a client speaking to 2 weeks ago, buying some real estate in France, and they're using a certain entity structure in France because it's more tax efficient. Same in Bali. We have a client in Bali is buying something in Bali. So it's not just a matter of writing a check. Here's your cash. Give me your stuff. You want to do it in a way that minimizes any potential negative impact going into the future. And we're not talking about taxes, but also potential liability issues. So take advice. Moving on, scrolling down. Dual Aussie US. Do you have expertise in the tax treaty? Where can I find information on that? I currently live in the US and pay tax on my earn income only in the US. If I had earned income in Australia, would I need to pay tax? Do I declare blah, 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 declare my, yeah. So if you have a super, which is the Australian superannuation plan. So we have a partner we have a partner firm that we work with in Australia. So I commonly deal with Australian tax issues. Our partner firm is one of the top 10 accounting firms in Australia and New Zealand. So yeah, they're pretty clued up on the Aussie side. And yes, there's an Australian US tax treaty, and you can find that on the IRS website. And it follows the model treaty, so there's nothing unusual or special about it. But the point is that Australia taxes on your worldwide income unless you sever ties with Australia. The ATO will chase you and find you. But if it is that you're properly resident in the US, you're only paying taxes in Australia on your Aussie source income, not on your worldwide income, only on your Aussie source income. In the US, however, you will be needing to declare and pay taxes on your worldwide income, including declaring that super. You need to declare the super. Of course, without even having to invoke the treaty, you're not going to be taxed twice. It's rare. It's possible, but it's rare to be taxed twice. Once your tax team knows what they're doing. If your tax team does not know what you're doing, all bets are off. You may think that all accountants are created equal. That's the same thing as thinking that all doctors are created equal. Therefore, I should go to a neurologist to get a cardiological exam. No, I mean, they're both doctors, but they specialize in different things, right? To deal with international tax issues, you need to go with a team that understands international tax issues. So anyway, just cutting to the chase, Yes, you declare your worldwide income, and you need to declare your super and everything that you have in Australia on your US tax returns, on the Australian tax returns, on your Aussie source income. And moving down. Blah, 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 blah. Okay, I was born in the US, was there till I was a child. I've never claimed citizenship in the US. Okay, I'm gonna move this so I can read this properly. Okay. I have never claimed citizenship in the US and have always been a citizen of another country in Southeast Asia and always lived there. A couple of years ago, I was in a government delegation to visit the US, and when I visited the US Embassy to get a visiting visa, I was asked instead to claim a citizenship and was almost refused entry otherwise. That's correct. However, due to being a government delegation, I was allowed a one-time entry visa as a citizen of that other Southeast Asian country. I did not sign a citizenship form, which partly also consisted of a form to agree to paying US taxes, since I have been wondering what can you do to resolve that situation, blah, 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 blah. Right. The thing is that, okay, so like, for example, if you have a passport to country X and you lose your passport, it's stolen, or you just lost it. The fact that you don't have a passport, does that mean that because it was stolen or lost or whatever, does that mean you cease to be a citizen? Of course not. So the passport is evidence of citizenship. The passport doesn't constitute citizenship. So the absence of a passport doesn't mean that you're no longer a citizen. So the case study for that, I guess, popular, is the Prime Minister of Great Britain right now, Boris Johnson. If you didn't know, he was born in New York, and he left as a child. And, he ignored his US tax obligations until he became the mayor of London, and he tried to sell one of his properties in London, and the IRS came knocking, hey, remember us? So the point of that is just a reminder. I think I mentioned it earlier, accidental Americans and stuff like that. By law, and this is not just the US, any country of which you're a citizen, by law, when you are entering that country and you are a citizen, by law, you must enter on the passport for that country. So if you have multiple passports, like many of us do here, I mean, it's a thing, right? When you're entering your country, a country in which you're a citizen, you must declare that citizenship. When you're leaving and you're going somewhere else, you can do what you like, right? So they were absolutely right to deny you entry into the US unless you were going to produce a US passport to enter. And if it's an offense if you were to use another passport and deny US citizenship on entry. But anyway, to get rid of the US passport, to get rid of the US citizenship, it doesn't matter whether you have a social, it doesn't matter whether you have got the certificate of birth abroad, it doesn't matter whether whatever, you're still a US citizen, you need to renounce it. And as I mentioned, we do 2 or 3 people each month giving up their citizenship, and we can help you with that. But essentially, it would involve, there are 2 tracks to giving up your citizenship. There's the immigration side and there's the tax side. The immigration side is super simple. I'll give I'm intimately familiar with giving it up in, let's say, Indonesia, Singapore, Philippines, whatever. So you go on the website in Singapore, for example. You go on the website and you make an appointment and you go in and you say, I want to relinquish my citizenship. They get you to sign something. If you have a passport, they take it off you. If you have a travel document, they'll take it from you. And it's dated the date on which you have walked in and you've surrendered. Now, you don't get the piece of paper that signifies that you've lost it's called a CLN, a certificate of loss of nationality. They won't give it to you immediately. It needs to go to Washington, to the State Department, and then they will stamp it, but it's backdated to the day that you entered the embassy. So that's the immigration side, super simple. The tax side is where it kind of gets a bit complicated. You declare on your paperwork that you have been compliant with US tax rules for the previous 5 years. which means that if you have not been compliant with US tax rules, you need to retroactively file the last 5 years tax returns and 6 years FBARs. FBARs stand for the foreign bank account report. Remember, we mentioned that you need to declare foreign bank accounts. So once you do that, we do it under something called the Streamline program, which in theory, once you qualify, it allows you to waive penalties. You pay interest on any taxes due, but at least no penalties, right? Because you've come forward voluntarily. So you get your taxes cleared up, and we do it concurrently with the immigration side. And once you do both of those things together, you're free and clear. If you are covered expat, as mentioned earlier, then, and you may be subject to the exit tax, we need to do some pre-expatriation planning. But once that's put to bed, you can do what you need to do and get rid of it. But you must formally relinquish it. Otherwise, even though you don't have a passport or whatever, you are still a US citizen and subject to taxes on your worldwide income. So moving down, I pay tax on the interest and dividends that I earn in Australia in both countries, right? Okay, definitely you need to pay taxes on your worldwide income in both countries. In the US, at least. So let's talk about the US, because for Australia get a bit complicated right now. So you declare your worldwide income, but remember we said that US taxation, US international tax is counterintuitive. What do we mean by that? And we mean that you would think the IRS is all about collecting its money, right? Getting paid, but as evidenced by the way penalties are being levied and the way and the magnitude of the penalties, it appears as if not declaring international assets incurs more penalties than not paying taxes. Seems weird, but that's the way it is. So you need to pay, not you, but just everyone needs to pay special attention to financial assets in general, income producing assets in general, but financial assets in particular that lie outside of the US, including bank accounts, including pension plans like the super, including mutual funds, unit trusts, any sort of investment vehicle outside of the US. Take advice. Does it need to be reported to the US government? So yeah. Okay. That's it. Any other questions? Nope. Okay. If there are no further questions, I want to thank you for coming this evening, this morning, and participating in our webinar. Please have a look at htj.tax, where we have future webinars coming up. We've done Ireland recently. We're doing Spain and Portugal. I think we're doing Spain tomorrow. Portugal might be next week or the following week. We do one every so often for location independent professionals called Digital Nomads. No, we haven't done anything in Australia yet because, and well, it's something that we could look at. I can speak to my colleagues in Australia, but typically there's a low demand for Australia because there are so many US Australia tax specialists that it's rare for someone not to have a team that they're working with. But yeah, no, we don't do any we haven't done any for Indonesia either, not recently. When was the last time? Last time we did one was with the American Chamber of Commerce in Indonesia. So we did that towards about third quarter last year. So none coming up, but we can reach out to them, seeing whether we want to do, whether it's worth doing something coming up. Well, we have quite a number of clients in Indonesia. Our colleagues in Indonesia, the Moores Rowland office in Indonesia is the 5th largest accounting firm in Indonesia. Main office is in Jakarta, and there's a satellite office in Bali. So, major clients, including the US government. So we're pretty much on top of Indonesian tax issues including the new omnibus bill. And there's been a lot of tax reform in Indonesia. So if you have any Indonesia-US tax issues, please feel free to reach out to us directly. And our team, head of tax in Jakarta, Dicky and myself, we can definitely work with you on it. Similarly, if you have any questions on Australia, please reach out to me directly, and myself and one of the team members in Sydney or Brisbane can work with you to make sure it's put to bed in the right way. So, yep. Any other questions? Nope. Thank you very much for your time. Have a good morning, evening, day, depending on where you are. Bye-bye.
Here are 4 ways we can help you. Number 1. Sign up for free webinars on US expat taxes and international entrepreneur taxes at www.htj.tax. Number 2. Stream premium educational videos at www.htj.tax. Number 3. Contact us for tax optimization consult over Zoom. Number 4. High net worth. We can quote for doing your US international taxes returns. Our books and upcoming event are available at htj.tax. Please subscribe, like, share, and comment below. Email us at help@htj.tax to engage us, to advise on international tax or business matters.